Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 26th, 2011. Well, folks, the markets got off to a pretty solid start today, gapping higher, a small pullback initially, as you can see on the 10-minute SPY chart, which again mirrors the S&P 500. 1-2 bar pullback, and then the markets took off to the upside as it was buoyed up on anticipation of the Federal Reserve at 2:15 p.m. Eastern Time. And right now, again, you can see the markets had pulled back a little bit right around the 20 moving average and are now floating sideways to up ahead of that Federal Reserve announcement. And again, look at the volume down here. Everyone is just on hold at this point. But I think the biggest thing that you want to recognize between yesterday's video and today was the amazing buy program that hit this market yesterday going into the close. The markets, again, if you go back to yesterday's video, I clearly said I don't see them selling this market off on the back of the fact that Obama was going to be doing his State of the Union address. I said I just don't see it. And that was right around here where the markets were starting to bounce up. After I said that, the markets went back down to a double bottom and tried to break down, and it looked like I was going to be wrong. I'm sure there were many people saying, wow, really? Maybe he was wrong here. And then all of a sudden, at 3 p.m., a massive buy program of epic proportions took place. The markets ripped higher. Take a look at that, going all the way back to the flat line. The spiders actually ended up 7 cents on the day. Now, why did I know that was going to happen? And again, why did that happen? Well, keep in mind, folks, the Federal Reserve, the markets have been being propped up. The asset bubble continued to be inflated. So the average American thinks things are getting better because their 401k is increasing and such. So that whole mentality has been what the Fed has based this market move on, or has caused this market move on for literally months now, if not years. Now, the biggest move has been really since Thanksgiving, where they've really gone into full effect. But if you think about it, you had the State of the Union address last night. There was no way the Fed was not going to pop this market up into the close yesterday with the State of the Union. The president's not going to go on TV in front of the whole entire nation making his once-a-year State of the Union address when the markets drop 100 points or 200 points. There was absolutely no way. I mean, think about it logically. The Fed's propped this market up day in, day out for how long now? You think they're really going to stop the day before or the day of the president's speech? Not even close. So, again, an amazing recovery here. The market's going from pretty steep losses all the way back to the flat line. Today, after that, the markets have inched higher. We actually got above 12,000 on the Dow right now. We're hovering right around that 12,000 mark. It's going to be interesting to see if the day after the president speaks, if the Fed makes sure on their announcement it's good enough to keep this market above 12,000. Now, the market overall is overbought. I mean, we know that. But the bottom line is a market can remain overbought for long periods. So what we've been doing in the research center is taking very short-term swing trades. Whether it's a short or a long, it doesn't really matter as long as the chart setup is correct. For instance, yesterday, I gave out the alert to the research center on AUY, Yamana Gold. Why? Because it hit the 200 moving average. And again, we all bought right here at the $10.90 level. It currently is trading up 40 cents from there on an $11 stock here to $11.30. And see how short a term that is? And it's almost to target right now. It's almost there. We have a break even or in the money stop. It's a guaranteed winner at this point. You see how that works? It's literally a 1 or 2 day swing. You can go long, you can go short, as long as the chart pattern tells you it's okay. All right? And again, that was a no-brainer. You had gap fill right down here as well, plus the 200 moving average. And again, look at that little one-day pop from this low back up, and then today again on Yamana Gold AUY. Use the charts, folks. They will tell you everything. We teach this stuff in the research center. We give these trades. I gave this exact trade out yesterday in the research center at the price of $10.90. It was there for the taking. And again, just continue day after day. Take a winner here, take a winner there, and the profits add up. All right, now, by the way, folks, we have a webinar this weekend. Saturday is the webinar. I do encourage you to join that. We will be going over count timing and a lot of key technical things that we really don't reveal even in the research center or the intraday stock chat. It is stuff that the hedge funds use. These are count systems. These are key things that we've developed over time that, again, make a trader even better. You add these to your arsenal, you're even more profitable. In addition, we have a new DVD on the horizon that will be released soon. If you do this webinar, I believe you get the free DVD. All right, the DVD free. All right, it's going to be a value of probably about $200, I'm guessing, once we price it out. It's an unbelievable DVD. And again, if you take this webinar, you will get that DVD bonus as a freebie. And again, it will be sent to you in the next few weeks, assuming you take the webinar. So it's a very, very big added incentive. This is a first DVD. It's not available anywhere. It won't be available anywhere for at least a month. And again, the opportunity is there to get this DVD for free. Again, if you sign up, no one else will have it. You'll get it in the mail before it's even launched on the website as a sale. All right, so big things coming here at In the Money Stocks. Let's make some more money. That's the bottom line. I'm all about making the money. All right, let's go to some other charts. Let's go back to the SPY. Again, Federal Reserve interest rate meeting will be announced today. The results at 2:15 p.m. You can see the volume is just dying out as people wait for that. The markets could float up to the double top here, but once that announcement is made, be ready for volume. Now, is the market going to drop? Is it going to pop? Well, we're going to have to wait and see. If it pops, your target's the 131 level. I've stuck firm on this, guys. Literally going back to, let's see, probably a couple months ago, we talked about the 131 level as being a master level. I gave this out to the Research Center members months ago. Guess what? The market has just continued to inch higher. We made new 52-week highs today at 129.99, only $1 away at this point from that level. That is your key level to watch, all right? If we go to the 60-minute chart, just continue to watch. You're stuck between these two lines. These are the two lines I gave my members a while ago based on technical analysis and calculations. Notice how the market is staying between them. It stayed between it here. You got below, you never confirmed. You got below, never confirmed. And again, as long as it stays in there, you have no breakdown. The market should continue to go neutral to sideways to possibly higher. Okay, and again, obviously, we are looking at some various shorts out there as well, but you got to be a Research Center member to get that. You got to be an Intraday Stock Chat member to get these plays. The next AUY could be posted later today, and it's going to be a great winner, of course, but you got to be a member. Okay. All right, so that's what we have going on right now. Let's take a look at Goldman. Goldman is trading up 75 cents, not much doing there. Apple Computer continues to have a good little surge here, up $3.50. Very nice little move there, trading near $3.45. It's about $3 to $4 off the 52-week highs. I do believe the 350 level will be some good resistance. That would be a pierce to the 52-week high by about $1.40. Once you get above that, it should be interesting to see it as a possible pullback candidate. Steve Jobs leaving will continue to keep a cloud over that stock for now because it's just the unknown. The stock had great earnings. I mean, the company had great earnings, but that was when Steve Jobs was still there. Can they still perform? Now, probably they will still perform, but any sort of crack in next earnings, and this stock could get pummeled. So, again, keep an eye on that 350 level, in my opinion. Amazon has earnings tomorrow, folks. The stock trading down about 70 cents. It's had a pretty solid fall. You can see right here. Look at the fall, and it's actually making a bear flag here. But again, I'm not looking to short this before earnings. It's way too high risk, especially after it fell. All right, other stocks. Ford Motor Company up 42 cents. Notice how it came down to the 20, hovered on the 20, now popping back off the 20 moving average. JP Morgan's up 45 cents. Exxon and Chevron continue to be very strong here, both up about 50 cents as those continue to grind up ever so slightly. All right, let me see if there's anything else on the small cap side I'm interested in. Small cap wise, pretty light right now on the small caps. I did release the hidden gem earlier this week. That is for you in the Research Center. It's a once a month type deal. The last hidden gem ran 60%. The one before that, I believe, over 100%. They are hot. And again, it's a once monthly thing usually. And again, it's out there. I just released it earlier this week. If you join the Research Center, you get that as well. And again, it's hovering just above. It already moved from, I'd say it's about 5% up already from where we mentioned it. But maybe it'll come back in so people can buy it back down there. And then it'll take off in a few weeks. All right. Let me see if there's anything else here. Market again. Let's take a look at the dollar. Always good to keep an eye on the dollar here. If we look at the dollar is fractionally weaker, but not that much, just down 2 pennies on the day. The GLD continues to be down, but just down 15 cents on the day, just down 15 cents. And again, that's coming back nicely. AUY, take a look, folks, as it continues to inch back to the double top highs. If it breaks through, it should go to our target on this at around 1140 to 45 on Yamana Gold. And again, great chart there on the AUY. Great call from yesterday, all right? They will continue to be published in the Research Center. You get everything included in the Research Center for $49.99 a month. Chat room's $199. You ask us questions. We give you live analysis. You see our live charts on the screen. You get it all in the chat room, all right? Again, webinar, join up. Get that new exclusive DVD before it's even released. It's going to be an amazing DVD. You will learn more than you could ever imagine. And I will talk to you all tomorrow. Take care.